We got another exciting day in the markets. Yesterday, kind of a bit rough when you look at the indices, and especially Nvidia's have been covering recently. So we're going to go through those charts. We're going to take a look and see exactly where they're lining up right now, what exactly to look at going forward from here. And then Tesla, I think, is also of interest right now. I'm also going to toss up TLT. It's going to be very rapid fire at you this morning. I'm going to try and keep this quick, clean, and concise for you. There we go. So we go to SPY. What do we see? Well, I said about yesterday in the video that we got a rejection off the 50, and that could be a bearish thing in the near term as we're still up above the 200-day, which is an overall bullish thing. And when you look at the monthly, weekly charts, we're still in very much bullish territory, although we did also lose the 20-week, I believe, as we, if we were to look at that chart. But you can see we got the rejection on Wednesday, and then on Thursday getting rejected off that 50 days, down below the 50, down below the 20, that 200-day. Right now we're at 586, down to about 580-ish is about where we can look at, maybe even 575 down to this previous peak, but we are starting to sit on top of these previous peaks and these previous lows that you see here. So peak, valley, and then a little bit of chop down there. So we're not in bad shape. A bit of a big volume day yesterday, which could show a little bit of conviction in that movement. Where does that put us right now? Well, that means that we need to get back up to that 50-day in the near term. If we can't do that, I mean, it is possible that we chop sideways, but it could also be that we start to head down towards that 200 as we look for support. And so we do have a fair amount of chop going all the way down as low as about 568. So 568 up to about where it is right now. We could see any amount of mixed movement in there. And if we take a look at this thing from peak to trough, so from our most recent peak down to our most recent low on this, we haven't hit correction territory of that 5 to 10% yet, but we did get darn close to it, bouncing a little bit in the pre-market hours. We'll see where we line up for that. So we have PCE coming out today with personal income and outlays at 8:30. So hopefully that gives us some relief. Maybe we get a little bit of hope from that inflation comes in on the low side of things. And then it's all about the labor market reports that we get in the following week. Those are going to be absolutely huge to watch for us as we get into that early March, that we're looking for further signs of what exactly is going on with the labor market. And do we still see continued strength there? Do we see the subdued inflation? And then also remember that we want to pay attention to implications for GDP and easy monetary policy. That all deals with the 4 pillars that I've been talking about in this channel and that are going to cause the markets to rally right now. And right now, every one of those pillars is in question. So we see the market selling off. So going over to the Qs, we're riding right across these previous peaks, these times when we either hit a peak and sold down, or when we got a little bit of mixed results. You can see if we go all the way back to January the 13th, we had that previous low. So far, we tagged that at the moment. The 200-day right around 491 is the next thing that we're looking at if we continue to the downside for the Nasdaq 100's ETF here at the QQQ. So make sure that you pay attention to that 200-day. Watch for a bounce if we get there. We could bounce sooner, but definitely watch to see what happens around that 200-day. We either bounce and find support, or we break through it, retest it, and then we could see a further sell going on. That's just from a technical basis from the charts that we see right here. IWM is showing us what it looks like to break down below the 200 and potentially leading up to a death cross moment. Now, mind you, the death cross would happen after a large sell where the 50 and the crosses down over the 200-day. We already have the 20 and the 50 kind of battling out right now to see where exactly they're going to go, but both negatively sloped, and we start to have a little bit of a curling over of the 200-day with the Russell 2000 stocks. They're going to be more sensitive to economic strife, if you will, than what we're going to have for the Nasdaq 100 or what we're going to have for the S&P 500. So down below the 200-day for this one, and we want to watch and see from a historical basis, the area of chop starts right around where it's at right now, around 212, 210-ish, and goes all the way down. On this one, I'd say the meat and taters of it is around 196, so just below 200. Nvidia came down to about this trend line that we've seen for these previous lows. We broke down below the 200-day, and last time we did that, we ripped right up above that and above the 50, couldn't quite hold it, and then got a big old red candle yesterday down about 8.5% during the regular trading hours. We want to stay above this trend line to see it float back up. Earnings weren't bad. And I got to say that, well, what we're looking at is future multiples. So we have a correction on that, assuming that those multiples are going to be, or that future growth is going to be infringed upon. So this is the market panicking a little bit and being a little bit fearful of what comes next for Nvidia. And that could cause some trouble, especially if the overall market sells down, which we got a big sell yesterday. So we also have like I talked about, that multiple compression taking place, along with the fact that we're adjusting for the growth numbers that we're getting from the most recent calculations based on the most recent earnings. So it kind of got a double whammy in Nvidia yesterday. So it probably going to sell down in and of itself anyway, maybe a little bit sideways. And then the rest of the market, when the Nasdaq 100 sells down 2 and 2.5%, Nvidia, yeah, that's part of it, but then it also drags other ones with it, being a market leader like it is. Tesla is right down here. Let me get rid of a lot of these lines on here. Tesla is right down near its 200-day. Watch for a bounce to happen off this line. It could potentially take us back up to about 308 to 324. So be on the lookout for that to see if we get that bounce coming in there, as it could happen off the 200-day. We often get those bounces even if they are temporary. So be on the watch for Tesla for that. So guys, where do we find ourselves right now? Right now, we still find ourselves in the midst of some decent uncertainty, that we have a little bit of correction coming in, a little bit of that fear, uncertainty, and doubt coming our way in the markets, being priced in right now, that we don't have the green light permission for a full-on bullishness from where we're at right now. We tried for it, just didn't quite get it. And so that means that we're kind of in the mix until that next big catalyst comes along. Maybe inflation reports are that big thing, maybe labor market reports. Honestly, I think it's going to be quite a few of them wrapped all together. And then, of course, we want to watch and see the Trump policies that are out there. And now, something that I have no evidence of and nothing to substantiate this, so I want to put out that disclaimer. We'll call it even a conspiracy theory, if you will. If we're going to start a sovereign wealth fund for the U.S., and we want to have that received in a favorable way, even if it's not at first favorable at its inception, do you want to start that sovereign wealth fund with the market at its peak? And if there's a Bitcoin strategic reserve in there as well, do you want to start that while Bitcoin's at its peak and it potentially sells and then it looks like a bad idea and then gets poo-pooed on? Or is it something that you want to start while the markets are down and then the markets recover and then it looks wildly successful in the near term? I think it would sooner be that second thing. And I'm not saying that this is political strings being pulled. I'm not trying to cause that sort of conspiracy, but I will say that there could be some incentive somewhere in the background to kind of move things along the way that they will and kind of spell out certain narratives throughout the markets. And, potentially we're seeing that, or maybe even if that's not the case, let's put it in a more benevolent light. Let's say that it is something that then catalyzes the idea or makes it more appealing idea for a U.S. sovereign wealth fund and a Bitcoin strategic reserve because they are at lower valuations than they're at right now. We have stocks trading at lower multiples than they are right now. That could open up that opportunity, make it look even more lucrative should we be at more depressed prices than we could see at those higher prices to buy low and then hold on to it while it's high, or even sell high, whatever that is that they're going to do with that strategic wealth fund. I think that's something to pay attention to. Just some things to kind of chew on, mull over. You can comment on it if you want to. Maybe I just sound crazy. Maybe there is something to it, and I invite some creativity here. If you guys want to go ahead and discuss that in the comments, and then also if you want to support this channel, check out the links in the description for the Patreon. Click on that, sign up, head on over to the Discord to see my buys and sells, see my technicals, talk to me and my community members. And if you guys want to learn to do technical analysis yourself, trade using the bread recipe trading strategy developed by StockMo. That link is also down in the description as well. Sign up for that course and use the code word DOCTOR, D-O-C-T-O-R. You're going to get a massive discount on that and a top-notch experience, not only for the technical analysis, but especially for that bread recipe trading strategy that can help you figure out when to buy into things, when to sell things. So it can show you when those movements are going to happen. You can learn how to read the charts more effectively. And testimonials are coming out all the time talking about the success that people are having by following that bread recipe trading strategy, often covering the course in as little as one trade. Guys, check out those links. Hit me up in the comments. Subscribe if you haven't. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. I'll see you next video.